All right, guys, welcome back for another Bitcoin macro analysis video. Today we'll be talking about the Bitcoin stock to flow deflection model. But before we get into that, please just make sure to subscribe to the channel, like the video, leave a comment below. Right now we're looking at the Bitcoin USD chart on Bitstamp. Bitstamp has one of the longest histories in Bitcoin. It has the 2012 halving all the way back there. But we also have the July 16th halving marked off on the chart. And what I want to talk about today is, point out that the halving has a very obvious effect on price, right? Very dramatic and obvious effect that you can see here. But the point of this video is that I want to address the idea that some people might be looking at this and think, all right, well, you've already got the price appreciation from the May 2020 halving. I'm just going to wait until the next halving to buy spot. And what I'm trying to do in this video is to make the case that we haven't seen the full price extension from the 2020 halving. In order to do that, we need to go over to the stock to flow deflection chart. And right here, you can see Glassnode has the dotted lines marking the halvings. So it has the 2012 halving here, the 2016 halving here, and the 2020 halving here. And now what I want to draw your attention to is that after each halving, you see that the stock to flow deflection indicator starts to go parabolic, right? So here you get the parabolic spike, and then you get a little bit of a cool off, and then a parabolic spike back up to those highs. And then there's your bear market top. Now, if we go to 2016, you don't see that a dramatic spike initially, but what you see is actually a period of, the stock to flow deflection indicator going into an area of very, very deep premium and deep value. And this is probably the area of the market where, people are generally pretty bored. Bitcoin had just had a pretty severe bear market leading into that halving. And then, price is going upward, but it's not going upward that dramatically, until, of course, this parabolic rally. And then, of course, this draws a bunch of people into the market, and there's your market top. Now, if we go to 2020, the key distinction here that I want to point out is that we don't see those parabolic rises that we saw in the previous cycles, right? Since the 2020 halving, the stock to flow deflection indicator has not even reclaimed the highs of the halving. Now, of course, we go back here, price reclaimed the high with a parabolic rally, blew it out of the water here. But again, it's just been downhill into deep premium from the 2020 halving. We haven't had that parabolic spike that I would be looking for to mark the top of a cycle, right? If you're thinking about Bitcoin in terms of a 4-year cycle, you're probably thinking, or at least that would be what I'd be looking for to go, okay, this is a macro top. I need to sell my Bitcoin holdings. And of course, if that happened, right, that would be the area where, retail minded people are drawn into the market. And of course, that's the market top, beginning of the bear market. You know, I would be looking for the highs in stock to flow to be taken out relatively dramatically. So, right, I wouldn't want to see just a simple run above. I'm really looking for that, the parabolic leg above, like you're used to in Bitcoin, right? Very dramatic spike. And I think the fact that, there's sort of an idea out there that can't happen or that won't happen. Not that it can't happen, but that it won't happen or that it's not likely. And the fact that the sentiment in the market is leaning that way actually lends credence to the idea that it can happen, right? I mean, this is how the market works. The market, turns people around and then gets sentiment shifted the wrong way and then plays out its typical behavior patterns. So with that being said, that doesn't mean that Bitcoin can't go lower or that, the price can't go lower. Of course it can. And there are definitely very, very good targets to look at in that scenario. But, I think at this phase in the market, right, I, I want to be, I want to, on a macro scale, I'm more concerned about where can I be a buyer than where can I be a seller, right? Just because of what I'm seeing on a fundamental level on stock to flow and the price chart. And that belief is actually supported by some of the things I'm seeing in price structure. But again, those are different rabbit holes within themselves. Today, I just wanted to focus on stock to flow deflection and the lack of a parabolic rise that you see. Um, this 2020 downtrend in the stock to flow deflection into this premium is very similar to the 2016 flow down here. Now, what would have to happen for this type of catalyst to happen? Well, I think in in the broader macro environment right now in the world, you have a situation where you know all assets are going down because of credit contraction, because the cost of credit is going up, which makes the liabilities of leveraged players higher. In other words, it's more expensive for these major institutions to service their debt that they have on their books. And because of that, they have to sell their assets to cover those liabilities. And that's why you see every asset going down. But what would be the demand spark that would cause this type of parabolic rise? Well, if some of those macro headwinds that the market's facing suddenly shifted, right? If and who knows why they would shift, but they do shift often, and just hypothetically, if they do, then that would probably be the catalyst to start the parabolic demand surge that you would look for to demark a cycle top in Bitcoin. Um, Again, there are no guarantees in life. Anything can happen. But this is sort of the framework I'm looking at the market through on a fundamental level. Anyway, hope you guys like the video. Make sure to like the video, subscribe to the channel, and yeah, I'll be uploading more macro analysis videos as we get closer to the monthly close. So keep an eye out for that soon.